All right, welcome to Drill on Earnings. A quick look at earnings from Vertiv. I think it's one of the 50 most important companies in technology. This is a business story behind one stock on the move. I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research, where we cover the 50 most important companies in technology. Vertiv builds data centers. Data centers is the most important thing in our economy right now. AI data centers, and this is a company focused entirely on that, building them all over the world out of that global cosmopolitan center of the world that is Columbus, Ohio. Vertiv Q3 earnings were better than Wall Street's expectations of $2.6 billion in revenue, 99 cents in earnings per share. But we care about a lot more than that. We care about the depth of the numbers. So let's talk about it. Really strong revenue growth of 29% in the quarter for this company, doing really well. About $2.6 billion in revenues, kind of in line, but profits better than expectations. Improving operating margins at 19%. So they're busy. They're building more, revenues growing, and they're taking more profit at the same time. That's the GAAP number, and that's not the adjusted whatever gobbledygook that some of the accountants like to use here. This is driven by a big surprise, AI infrastructure demand. Their organic order growth was really a sight to behold. A 60% year-over-year growth in orders, up 20% sequentially. They've got a 1.4 book-to-bill, so they've got 140% more orders than they even were able to book in this quarter. They've got a $9.5 billion backlog, led by hyperscale and AI data center builds. Let's look at a couple things that they talked about here specifically. So profitability, as we mentioned, is going better here. Adjusted profits, as I say, I don't use their 43% number, but whatever number you want to use, it's a better number. Their services business is doing better, and that business has been improving for them across the world, except for, and let's get to this spot. Well, before we get that, let me tell you about one thing here. One of the things we see with this company is they've been talking about this for a very long time, Smart Run. It's modular building of data centers and AI. Think of it as like Lego blocks for data centers. These guys can roll in and slap these things up and get them running with all of the latest stuff with liquid cooling and the latest electrical, even future electrical. They're talking about 800 volt DC systems going straight into data centers. That is a system NVIDIA is only starting to contemplate right now. There are no announcements yet, but they're building for this now because they know that that's the future of data centers. NVIDIA's Rubin Ultra platforms, again, we don't know the specifics of how those are even going to work or what companies are going to be in them, but they're building for those installations to be ready for this 6 to 12 months ahead of where they are right now, thanks to Vertiv's planning there. Now, their business is big in the US, 64% of revenues in this quarter in the US. But this regional divergence was different. Their America sales are up 43%, but their EMEA business, and Asia was fine too, up about 20%. But that America business is cranking, like I said, up 43%. Asia cooling to 20%, but their Europe, Middle East, and Africa business is stalling because of power and regulations. They saw no growth whatsoever on a year-over-year basis for data centers in that region. Now, they still saw 17% of revenues, but no growth whatsoever. And they blamed it again on their inability to get power and their inability to get permits in those regions. And that regulation, they say, is slowing them down. So the stock sold off a little bit with those numbers, even though it's up 49% in the last year. So it makes you ask this question, what up EMEA? The rest of the world wants data centers. The rest of the world wants AI. Why the slowdown? Well, here's what we heard from CEO Giordano Albertazzi. And of course, you want to hear about Europe. You want to hear about it in an Italian accent. Here he is.
I probably have been more sanguine about the Europe reacceleration in the past than I've been now. So saying it is going to be a year from now. I mean, a year from now when we sit around the same table and phone summarizing our 26 Q3 2026 performance. That means that we are building some wiggle room there for things to really come back. And I truly believe that they will come back because the market is in a bad need for capacity, AI capacity.
But all right, what does this mean? What's your big drill on earnings takeaway? What's the one number that tells us a whole lot? Well, first, subscribe to this show. Click on the follow us or subscribe button, depending on the platform you're watching or listening on. It'll help us provide these in the future. And, I got 4 kids in college. Come on, help a brother out. But first, Vertiv Q3 earnings. Here's your essential summary, your drill on earnings takeaway. $444 million in Europe. Look, this was a problem for the company because, well, they otherwise had a really good quarter and really good earnings and growing demand for data centers. These guys build data centers, and what's more in demand in the world than that? It was not in great demand in EMEA. And that was a big issue with this quarter. It's why the stock sold off a little bit after these numbers came out, because you saw 43% growth in America. You saw 20% growth in Asia, and yet no growth in EMEA. That is a concern for Vertiv right now. All right, thanks for checking out Drill Down Earnings. I'm Cory Johnson.